Here to my favorite quote of the morning comes from Richard Breslow, writing in his trader's note that stop pretending that you care that the world is ending. He said it's a strange world when UN Ambassador Nikki Haley warning that Kim Jong-un is begging for war will get knocked off the top of the playlist by Lyle Brainerd telling you she's data dependent about a rate hike that could happen 3 months from now. I can't get it out without laughing. Joining us from LA is Ian Weiner, Wedbush Securities co-head of equities, and here in New York is John Stoltzfus, chief market strategist at Oppenheimer. John, I make fun, but it's kind of true. I mean, there was a little bit of risk off in the markets, but you really saw a lot of buying pick up in treasuries after Lyle Brainerd said what we knew she was going to say.
You know, there's nothing like the Fed to make things better sometimes, or they can also make it worse if the market doesn't understand what they're saying. And I can't help but think that what we have here is the market is really waiting to see what's going to happen in December with the Fed. In the meantime, they'll be watching very closely the economic data, considerations of where earnings and revenues are for U.S. companies. With a weak dollar, that should get better. So I look at it. I think we waffle a little bit in here, but effectively, we'd stay risk on, and we would stay cyclicals over defensives.
Ian, do you agree? Is it time to de-risk or time to stay?
It's time to de-risk, no doubt in my mind. We keep talking about this rational behavior, this mutually assured destruction in North Korea. But if I could quote Batman, what if this guy just wants to see the world burn? And it's amazing to me that when I look at how the investors are approaching this market, they're not concerned about the debt ceiling. They totally think tax reform is going to happen. And as far as the Fed raising rates, let me spare you the suspense. I don't think anything's happening in December.
Well, to what extent are the equities right now supported by that, counting on the Fed not to raise rates?
Well, I mean, I think the equity market's completely supported by the Fed not raising rates. I mean, there is no alternative, just continues to be the rationale behind buying stocks, because when you look at where the 10-year is, it clearly makes a lot of sense to own stocks. But there's absolutely no concern about all the other risks that are out there. And I think that's why each day you come in and people are just surprised that, wow, they're not even down when people are nervous about war.
So, John, is that right? Yeah. Are equity holders right now being compensated for the risk that they're assuming?
I think they are. I think we've priced the risk into the market. I think one of the reasons why we are below the 2450, which we'd crossed a while back, what that tells me is the market is pausing, it's considering, but the reality is this just looks like a new Cold War. If anyone who can remember back to the days of communist Russia and the Chinese under the leadership of Mao Zedong knows that was considerable uncertainty. Anybody who remembers when they first tested missiles in Russia and in China, those were very, very disconcerting times. We're back to that. But at the same time, for us, when we look at it, the reality is North Korea has been a wedge that has been has paid good service to the Chinese for years. Right now, if they were to launch a nuclear attack on any one of the allies of the U.S. or of the U.S., it jeopardizes the entire economic story of China. And China doesn't want that. China's working on balancing a communist regime with an economic offering for their people, and they recognize that, and I think they value it. So I think, if anything, it's the role of China and perhaps Vladimir Putin to step forward, talk to this guy, and then we'll live with this probably for years.